Thank you so much for that. You know, if you pull up all the three counters from a VST Industries to ITC to a Godfrey Phillips, major pressure building in there. In fact, ITC is already at a 52-week low in a single trading session, cuts of 9% coming in on that one. Likewise, the other two counters also seeing double-digit cuts as we speak. Now, the implication is the key over here. They are saying that the total tax load is expected to then rise by around 25 to 40%. Manufacturers are expecting to pass these higher costs directly to the consumers is what we're picking up so far. Now, some of the analysts are expecting the retail price of a single cigarette that could actually increase from 18 rupees as much as 72 rupees. And the steep price increases typically should lead to a reduction when it comes to legal sales volumes as well. Now, if the cost will not be passed on completely, it will lead to a major squeeze when it comes to margins. So this becomes a double whammy when you talk about ITC, whether to go ahead and pass on the price hikes, because if they pass on the price hikes, your volumes will go down to some extent. And if they do not, pass on the price hikes, then what will happen is it will impact their margins. In fact, MK has just come up with a note as well, where you can see the lines at the bottom of your screens, where they've said that a substantial duty hike from the 1st of February will need almost a 20 to 40% price hike across slabs. That's what we are estimating so far. And apart from this, they've also said that ITC and Godfrey Phillips are likely to see a big impact, while VST will have a relatively lower impact given that their portfolio current concentration as well. In fact, in the medium term, they're expecting ITC to gain back their market share from Godfrey Phillips in the DSFT segment, where Godfrey Phillips is expected to lose share in the RSFT. Now, this DSFT and RSFT, to be noted, are different categories of cigarettes that we are talking about so far. But currently, a 20 to 40% hike is what they are indicating. And WHO, they've said, has asked for tobacco taxation at 75% of MRP. In India, the tax on MRP was around 53%. So that's the differential that you're looking at. And now with the existing MRP, the new excise increase implies a tax payout of 73% on MRP. And that's the reason why you're seeing this kind of pain when it comes to individual stocks. All the three trading under pressure, cuts of around 9 to almost 16 to 17% coming in there for two of the majors. It's only VST Industries which is slightly resilient as compared to the two others. We will try taking this discussion forward with a couple of analysts as well during the day, but this is a developing story that one needs to watch out for.